Welcome to another episode of the Lightspeed Investing Podcast. I'm so glad to have Jack McColl, founder and CEO of Credit Stacking, back here with us again today. He is an avid pilot. He loves his private planes, and more importantly, he loves giving people access to freedom through the power of business credit, business funding, and doing it the right way. How are you doing today, Jack? What's going on, man?
I'm doing fantastic. It's really good to be here with you on our second episode. I'm looking forward to diving in on some really good tactics about business credit. It's just done amazing things on helping me create freedom in my life. So I'm excited to be again with you.
Now, last time when we first met, right, we discussed your entrepreneurial journey, what motivated you to get into business, and what did that 7-year experience teach you to now lead you to, this current space. You want to give people a high level overview and let them know what happened mainly to spark and ignite this fire of passion that that's really, I would say, influence you to do what you currently do right now.
Yeah, it's a good question. So it took me 7-8 years to figure out, in my opinion, what the best way to finance businesses was. And that's 0% interest business credit cards. So it took me literally 7-8 years of several different business ventures of figuring out, should I self-fund? Should I get on a business loan? Should I give away equity for the money? And I studied business at University of Washington. They didn't teach anything about business funding. And so I want to help people, give them the same resource and knowledge and expertise that it took me so long to develop. If I had this intel on how to get access to $100,000 to $300,000 on 0% interest business credit cards for 12 to 18 months, if I had that intel when I was 18, 19, 20, I would have made so much more money. It took me so long to figure that out. And I just know there's millions of people in the country, entrepreneurs, that are strapped for cash. They don't have the resources to get out. Maybe someone's stuck at a 9-to-5. They're trying to get access to capital so they can start their business and get out of the matrix, get out of the system. So I want to help people legally and ethically take advantage of the banks so they can use that money that they get approved to start businesses or scale businesses to create lives of freedom. I've been fortunate enough to build my life around many freedom-related things, live where I want, travel around the world where I want, and I'm completely self-made. It took me a long time to get to this point, but very little was given to me. And the biggest needle mover for me was getting access to capital from the banks. I'm looking forward to diving in and giving people tactics on how to do that. But it just provided so much freedom in my life if I had more money to inject into my business or different investments. So I want to give people that same intel and help them create lives of freedom.
Yeah. And more important than the freedom, right, is proper leverage, right? In terms of the inputs, is proper leverage that you yourself can have direct control over, right? As opposed to having to maybe, acquire business partners who may turn out to not be the best fit, and just putting other variables in place that may not serve you, right? So this is a bona fide way to do it independently in a self-sufficient way. And I'm excited to go into the details, man. So I think from a high level overview, right, we talked about there's different phases. So phase one, if you don't have a good credit score, you got to repair it, right? Phase two is like you got to have your know-how around how to get access to proper business funding resources like business credit cards, business lines of credit, right? And then the third tier is proper tax strategy. So I guess how do you properly have a conversation around credit, right? Like what do you look for there in your first phase before you move on to the other phases?
Yeah, when it comes to getting access to credit specifically, the three pillars that I break it down to is optimizing your credit report to make yourself attractive to the underwriters. 2, kind of simultaneously, you're building strategic relationships with the top lenders, the best lenders that have these 0% interest business credit products. So when you apply, they trust you, they're going to give you, you're going to get approved for much more. And then 3 is it comes down to knowing what to apply for, when to apply for those cards, and how to apply for them. So if we start on step 1, it's going to be the optimization. It's how do we make your personal credit report look as attractive as possible to the underwriters so it becomes very easy to get approved. And the most important thing of getting these high approvals is the optimization of your personal credit report. You don't need to have business credit scores. They help. You don't need to have them. You don't need to have business revenue. It helps, but you don't need it. You don't need to show tax returns. You don't need collateral. That's why 0% business cards blew my mind, because you can get approved for $100,000, $200,000 with a newer business with no proof of income. All you need is a good, strong personal report. So what do I mean by strong personal report? One, you
Okay.
do need to make sure your payment history is good. Like, you can't have a bunch of late payments. You can't have collections. If that's you, hire a credit repair professional to get those disputed and removed. I do have a credit repair service if anyone needs, but that's going to be first to get the derogatories removed off your credit profile. Then it's going to be really the building of it. So it's paying down your personal balances to under 30% on each personal revolving account. It's going to be disputing and removing any excess hard inquiries in the last 6 or 12 months. And then when it comes to the type of accounts, the number of accounts, and the limits of those personal accounts, all these things matter. So if you add up your personal credit limits, it's going to give you your collective personal credit limits. We want to see collective limits between $40,000 and $80,000. If you add up your credit limits together, between 40 and 80. Okay. A lot of people, they're at like 20, 30, etc. They would be people who would want to apply for a high limit personal credit card to get their collective limits increased. Okay. So you would want to have at least a 720 score before applying for anything. Okay. If you need to get a late payment removed, do that. If you need to pay down some balances, pay them down, and then wait for your credit report to update. Okay. Then if you need to get another account reporting to your profile, ideally we have at least 4 personal credit cards reporting with collective limits of at least 40,000. And the personal credit cards you have reporting, ideally there's at least a couple from tier 1 banks. Okay. Tier 1 banks are the top banks: Chase, Bank of America, Citibank, Capital One is up there, Wells Fargo, Citi, if I didn't say Citi already. Those are some of the top personal credit cards. They look much better on your report than credit cards from credit unions. Like if you go to Navy Federal Credit Union, they can give you a high limit, but it's a low tier card, so it really doesn't swing much weight. If you have a high limit on a Chase card, that's going to swing much more weight. You're also building a credit relationship with Chase by having a personal credit card with them. So my high limit personal credit card list is going to be the Chase Freedom Unlimited, one of the Chase Sapphire cards, the preferred and the reserve, the Built credit card. You can pay rent on the Built card, and it's issued by Wells Fargo, which is a tier 1 bank. The Citi Strata Elite card, I would also add to that list. Okay. So getting tier 1 accounts that give high limits are ones you want to add to your personal credit report. A big mistake I see people make is applying for too many personal credit cards in a short period of time. So no more than 2 personal credit cards in a 6-month window. Ever. The people that do that, they're shooting themselves in the foot. So everything needs to be very strategic. So at that point, we've gone through some pretty good optimization steps. As I mentioned, simultaneously, we want to be building strategic bank relationships. Okay. This is very important. And so banking at banks like Bank of America, Chase, and Wells Fargo is super important. Bank of America is the most strict on relationship. With no credit relationship or no banking relationship, it's very difficult to get approved for their business credit cards. At Chase, it's a little bit easier, but you do want to have a business checking account open with some money in the account, at least at the time of the application of the business credit card account.
And how much money are you talking about there? $1,000, $5,000, $10,000?
At least $2,000.
Okay.
At least $2,000. Because on these 0% business credit cards, it's 0% for 12 to 18 months, but you still have to pay 1% of the balance. So if you're trying to get a $50K card at Chase, and if you think about it, if you max it out, 1% of the balance is $500. So if you don't have at least 4 months of runway, $2,000 in the account, why would Chase give you $50,000? So you want to have at least $2,000. $10,000 is better.
Nice.
$20,000 is obviously much better. So if you have a business that's cash flowing, it's making revenue, the most important bank to show that revenue to is Bank of America. for
Nice.
sure.
Okay.
Chase would be number two. Chase is less focused about seeing revenue. They just want to, they appreciate having a credit relationship, like having a
Mm,
personal credit card with them, maybe do your personal banking there, having a business checking account with a few grand sitting in it, at least 30 days leading up to the application.
okay.
Wells Fargo is somewhat similar to Chase. I just would prioritize them at number three under
Yeah.
Chase, basically.
I feel like Chase is more international too. So
Chase just they have better credit products. They have higher
yeah.
limits.
Yeah.
They're just a slightly better bank. So that's how I
Mhm.
would focus there. When it comes to a
Right.
credit relationship with American Express, American Express has a banking option, but it's not like a legit bank. There's no branches. I
Hmm.
think the best way to build a relationship with American Express is through getting either a personal credit card or
Okay.
getting one of their business charge cards, like a business gold or a business platinum. It's very
Hmm.
easy to get a business gold because it's a charge card. They have spending power. They start as small, then they work your limit up basically. So you want to have at least either one Amex personal card or an Amex like business gold, for example. It's a great card. It's in the back of my phone right now. I love the card. So get one of those cards first and then spend on it for at least 3 months, build that credit relationship. And then Amex has two different 0% cards,
Yeah.
both 0% for 12 months. You can apply for both of them when you're ready, when they trust you. And then hopefully you get 25K times two, and that's a total of 50K just at American Express.
Hmm. So let's say you're doing this, right? And obviously you're advising people if they're starting from scratch, make sure they have a strong personal credit, right? So as you build these relationships and you start getting access to these business credit cards at 0%, do you still recommend people to go back and look at applying to newer, right, and additional personal credit cards, right, so that you like maybe like keep a good balance between the two, or once you go the business route, you just focus on maximizing your business credit, right? Like, what do you have to say about that?
Yeah, it's a good question, Philip. So I think in general, credit is a journey to be on. And it's not about just building credit. It's about
Hmm.
building strong credit, maintaining strong credit, and then
Okay.
continue to build it over time. To get an
Okay.
850 credit score, I just looked at a profile recently. I think it was 14 or 15 accounts total that individual had to have an 850 credit score. So if you just have two credit cards, one mortgage, one auto loan, maybe a student loan, there's no chance of getting an 850 credit score. So you need to have several open accounts to get to a perfect 850 credit score. And not saying everyone should try to get a perfect score, but you do want to have very resilient credit where
Hmm.
the unfortunate happens, you get a late payment, but your credit profile is so strong. The payment history is so deep. Your average age is 7 years. It's just more resilient. And so I
Yeah.
think it's
Yeah.
very strong, very important for people to build strong credit.
I
So
see.
to your question, I think if there was some short-term needs of capital, I would
Hmm.
do some of those optimization steps that I just previously went through to get to
Hmm.
kind of those minimum requirements, and then do the business credit applications, get access to the funding. Hopefully you can put that funding to great use in your business where you're investing, and then kind of circle back to slowly getting more personal credit card accounts. And these are things like maybe doing 2 to 3 personal credit cards a year, but like not more than that. You don't want to get more than 3 personal credit cards a year. This is things like me, if you're paying rent, maybe you do a rent reporting service where it reports your rent on your credit profile. That can help people. Um,
I see.
yeah, and another thing is to not close personal credit card accounts. You want to keep as many open as possible. If you have a personal credit card that has an annual fee on it that you don't want to pay, what I would first do is ask that bank if you can downgrade to a card of theirs that
Hmm.
has a free version or just a lower annual fee. That would be best if you could downgrade to a free version of the card. Like, for
Hmm.
example, the Chase Sapphire Reserve card. It's now an $800 annual fee, but their free version is the Chase Freedom Unlimited. Okay, it's a
Hmm.
different card, different benefits, but it's a zero annual fee.
Hmm.
So if you're in a position where you've had the reserve, you're paying $800 a year, and you're like, I just don't want the card anymore. I'm going to close it. I
Okay.
wouldn't do that. I would call them and say, hey, can you downgrade me to the Freedom Unlimited? That way, keep the account open so the
Okay.
age stays on your profile. And
Oh,
then
I see.
you're forfeiting the benefits and you're not
I
paying the
see.
annual fee. So you
Because
keep
so that's actually funny because for me personally, there's actually cards where I let them expire, like because they're like just not used. Because as I've gotten more mature, right? I've cut down a lot of unnecessary, spending, especially when I would go out on a lot of dates. The Nordstrom cards, the Macy's cards, right? Whatever. It's just like just getting more prudent, right, with understanding how to actually spend money wisely from the perspective of business debt versus consumer debt, right? So for me, like I'm like, oh well, since I don't really, if I don't have the cards, I won't be able to spend it. It's like if you don't have a cigarette, you're not gonna be inclined to be able to use it. So in those scenarios where maybe there's only one tier, they don't even have a downgrade option. What do you recommend doing? Do you still recommend maybe just making a minimum purchase so that it stays active, just because you can leverage the overall age on the report? Is that what you're saying?
Yeah, so leveraging the age is very important. To have a high average age in your profile is really helpful. For one, and back to being intentional with credit, I would
Yeah.
only apply for credit cards on the top tier banks. Okay, no credit union credit cards, no
Okay.
store retail accounts at Macy's, Sephora, Cabela's. None of those. They look like crap on your profile.
Oh, okay.
So to your
Yeah.
point, to your question, if you have an account open, you do want to have it open as long as possible. If there's an annual fee and there's no free version and you just don't want to pay the annual fee, well, then maybe just close the card.
Uh-huh.
But the more you can keep open for as long as possible, the better. I actually, and also to your point, if you don't spend on the card for like 2 years or maybe even a year, they can close your account. So you can
Right.
do one of two things. You can either remember to put a transaction on it once every year so they don't close it, or actually, I just started using a service that my friend created. I think it's called reoccurring
Okay.
transactions.com.
Yeah.
If I'm not mistaken, I think it's reoccurringtransaction.com, something like that. And they put $1.50 transaction on each of my credit cards that I don't really use, but I want a transaction on the statement every single month. The accounts are on auto pay. I don't really use them because I just focus on like my top 3 personal
Yeah.
credit cards. But I have 5
Right.
more that I want to stay active, but I don't really want to use them.
Now,
And
well, let's
so,
talk about that. So why is that overall age so important, right? For people that don't know about the credit game.
yeah, so it's 2 part there. One, the
Okay.
age is important. Also,
Yeah.
the number of accounts you have on your profile is important. And
Okay.
another thing that's important is if you have an account that's open, but there's no activity on the statement, it's not as significant to your credit profile because it's not
Okay.
reporting
Yeah.
spend activity. It's
Right.
just kind of like you're just, neutral. You're just sitting there. You have the
Yeah, it's like a flat line. That's what I was kind of getting at. Like those cards that I mentioned that kind of died out, because I mean, I also didn't really have much activity on it. So it's like, is it even worth it? Right.
Yeah. So the reason I like do the recurring transaction $1.50 a month, or just put a transaction on it, because not only you're keeping the account active, so the bank doesn't close it.
Yeah.
You're building longer trust with that bank, and 2, you're reporting spend activity on the statement, which is reported to your credit report on a monthly basis. So think about if a person had 2 credit cards with active history a month versus someone that has 10 credit cards, personal credit cards like me,
Okay.
that has 10 statements of activity that's reporting to the credit bureau. I'm building 5 times stronger payment history on a monthly basis because I have 10 on-time payments. So you
Right.
want to build, like as a consumer business owner, you want to be building this resilient payment history. So, and to your question, why is age important? It's just something that the lenders like to see. If your average age is over 5 years, you're in a stronger category. If it's over 7 years, Yeah, I think you need 7 years, if not mistaken, to have a perfect credit score. There could be some variance there, but
Interesting.
you want to aim for 5 to 7.
Well, it's definitely, it's interesting in how they categorize like as good credit history in terms of years, which it seems like, it's got to be the average around like plus minus 10 for it to be considered like a good start. You know what I mean? Like it's kind of crazy how 5 years they're still kind of like, you're a baby, you know?
It is crazy, but it's also hard to get 5 years of age. Like I
Mm.
work with people in my coaching program, they're 40, 50, 60 years old. They have like 3 years of age on their credit report. It's so
How?
crazy
How's that
because
possible?
a lot of times people, they have credit cards and they close them down.
Oh my
They get
God. Yeah,
credit
that's
cards and
true.
close them
Right.
down. They get an auto
They
loan.
didn't, they don't know. Yeah.
Their auto loan gets paid off.
Right.
Student loan gets paid off.
Hmm.
And so it comes down to the open accounts on
Yeah.
the report.
Gotcha.
So if you don't proactively think, how do I get more average age, then it's
Hmm.
young age. Because when those loans get paid off, they,
Yeah.
they close. So
Okay.
the only way you keep good average age is
Yeah.
these 30-year mortgages or these
Yeah.
10-year-old credit cards. So when
Yeah.
people keep closing their credit cards, it keeps decreasing their average age.
Wow. That makes a whole lot of sense, man. And that's just the foundational start of the conversation, right? Next, we have the ability to go do a deeper dive on how to actually get business lines of credit, right, at 0% through banks, right, revolving lines of credit, and etc. But of course, that is another whole topic, right? That's another rabbit hole to dive down. And then on top of that, we have the tax strategies. So for those listening in, right, just from a high level overview right now, what would you say is their number one thing to get started? Okay. In terms of an action step.
The number one thing, if you're not doing already, is check your credit and monitor your credit. Maybe you're already doing that. If you're not, you need to be looking at your credit like you're looking at the speedometer on your car. You need to be like looking at it, measuring it, understanding what's going on. Number two is just to understand you're on a journey of building credit. It's not just a week thing. It's not a year thing. It's a several year thing. If you want
Yeah.
to
It's a
really
marathon.
credit, it's a marathon.
Yeah.
And then just to how to keep trying to optimize your score, pay your balances down. Listen to my advice on apply for this high limit card.
Hmm.
At a tier one bank like the Built card at Wells Fargo. So start to optimize your credit. Then three is remember what I said about building strategic bank relationships. Okay, think about where you're banking. You're banking at Navy Federal Credit Union. Why are you banking there? Do they have the
Yep.
credit products that you want? Well, if you want 0% interest business credit cards or business lines of credit, well, Navy Federal doesn't have those. Or Citi doesn't have those.
Hmm.
Capital One doesn't have those.
That's right.
So don't bank there. Chase, Bank of America, Wells Fargo, I would be banking there. So again,
Hmm.
we want to be intentional with our time, with our effort. If we're going to get
Yeah.
a personal card, we want to make sure it's the best personal card to get. Maybe for the sign-up bonus, maybe for the relationship, maybe for the rewards you're going to generate.
Yeah.
So be intentional on things you're doing in credit and
Yeah.
build those strong banking relationships. Because the more trust you can build,
Yeah.
the easier it becomes to getting approved for capital. Like the other 2 days ago, I just got approved for the Chase Business Reserve Card, top tier business travel card, 200,000 point sign up bonus, incredible rewards on the card. I went in there, applied with my banker. I got approved in 2 days. Easy for me, but you have to do certain things to make it easy to get approved
That's
for
right.
top tier cards. Like
That's
the amount
right.
of free travel I'm going to get with 200,000 points, I'm going to get, because I'm really good at credit card points. I'll get easily $20,000 of free business class flights with that 200,000 point sign up bonus because I know how to leverage those points, transfer them to different airlines, et cetera, and get $20,000 in free business class flights. It's insane. So you need good credit, you need good relationships, you need to understand, okay, what cards to apply for, how to apply for them. And then, then you got the points and you have the card for your business, et cetera. It's insane what you can do.
I love it because now you get to fly either by yourself as a bona fide pilot, or you can let someone else fly you when you feel tired, right? So, look, I really appreciate the conversation. I know we can go do a whole lot more. But I hope if you're listening, you got a lot of great value. Listen, because Jack is a dear friend of mine. He's got a very exciting gift for all of you. Jack, do you want to share the resource that you're going to be gifting the audience today?
100%. So we're doing strategy calls, like really in-depth strategy calls to understand where people are at on their journey in credit and to give a little bit of a deeper dive. Like a lot of the things I just mentioned, I wouldn't say general, but we want to give you specific recommendations on your credit profile so you can get access to money and put that to use in your business, et cetera. So through the link below or creditstacking.com, we're doing strategy sessions for the next couple week for free hour-long strategy sessions. And then if you're interested, we have our coaching program, Credit Stacking. That's a done with you program where I really hold your hand through that process. We give you a customized plan, really make sure you get access to capital. But yeah, if you're interested in a free strategy session with either myself or someone on my team, definitely click that link down below. And thank you, Philip. And thanks for everyone listening in. We'll see if we want to do a third episode. If you want to have me on for a third episode, Philip, you let me know.
Yeah, man. It's always a pleasure having you on. If you're listening in, make sure you click that link below so that you can take advantage of Jack's generous gift to all of you. And feel free to message me on LinkedIn, Philip J. Hawk Chan. If you heard this episode, make sure you message me. Let me know you want to get connected with Jack. I can also do it that way too. Thanks again for your time. Really appreciate it. And look forward to speaking to you more.
Awesome. Thanks, Philip.
Yep. Take care.